Are we likely headed for a correction in the Montgomery County real estate market? Hello, I'm Jeff Wheatley, and today we're going to begin to answer that question. You see, real estate is a supply and demand game, and today I'm going to focus on the supply side of the equation to understand where Montgomery County is likely headed in terms of prices. Now, next week we'll come back, we'll focus on the demand side, and then we'll bring both the supply and demand so that you can really get a good perspective over where prices and the rest of the market is going to be going over the next 12 to 24 months. Now, we'll do this by examining the three segments of the marketplace. The first thing we're going to look at today is our builders. Then we'll look at our existing homeowners, and we'll look at the renters to help you bring it all together. So the first place we want to look at is our builders. They're the ones that bring us the new supply as they create new homes. So let's talk about what they're experiencing here in our local market. So nationally, construction costs have gone up an average of 26.1%. Unfortunately, there's not a way for us to survey a bunch of the builders to get that information here locally, but we can extrapolate what that does in the Montgomery County marketplace. So in the Montgomery County marketplace, it typically makes sense to build a new home of an $800,000 value or better. If we get much below that, once we figure impact costs and everything, typically we're spending about $60,000 just on impact fees and permitting alone. It doesn't make sense to build much less than an $800,000 home. And the reality is it's hard to get lending on anything less than that because of that equation. So what does that do? So a simple $800,000 home from last year, it's going to cost about $104,000 more to construct based on that 26%. And we're seeing it in new home sale prices. Those have gone up substantially. In fact, one of my clients from March to April, they were able to lock in before this happened, but just a 1 month increase was over $40,000 for a built on his lot property. Now, here's the next thing they're competing with. Permitting. Permitting is taking 4 to 6 months. It's gotten much better since COVID's died off, but it is still a delay. Luckily, we're not over in Prince George's County, our neighbor to the south, which I do a lot of business in. Right now, we're looking at 9, 10, sometimes 11 months just to get the permit. So we've talked about it before. I see it every day as a flipping. Next thing, supply chains affecting all of us, including our builders. It is a royal pain in the tuchus. I don't know how else to better describe it. Every conversation I have with a project manager has something to do with supply chain issues, this, that, or the other not being on site, switching out one product for another. The project managers, the builders, they're being creative, but there's only so much they can do. And the last thing that's affecting our builders, just like it's affecting the consumers itself, is their cost of borrowing has gone up. A lot of the builders have short-term loans which are going up as they build that product or as they're building new products. So right now, very tough on the builders. We're seeing less home supply being delivered to the market as a result of that. Now, all this, the builders not being able to deliver as much product, is on the back of an already house shortage. Obviously, we're seeing it in shortage of inventory, but Freddie Mac actually estimate that we're about 5.5 million household units short. And they break that down, so they've got multi-unit in there, but what we want to look at is nationally, we're 3.8 million units short of supply for this marketplace. There's no way the builders here in Montgomery County, with all the challenge they're faced with, are going to be able to make up their local portion of that supply. So check out the Wall Street Journal article on that. I've linked in the comments to it. So the second place we look for supply is from our current homeowners here in Montgomery County. And in a nutshell, most of them, many of them will stay in place. And the reason for that is with the increased interest rates, we have close to 3% higher interest rates than we had at the beginning of the year. Current interest rates are fluctuating right about 5.5% on a conventional. Our jumbo rates are right around 5.25%. So anybody who is making a lateral move, it's going to cost them anywhere from 20 to 28% more to buy the exact same home than it would have, assuming they have a mortgage on that. That's on top of them already having to pay brokerage, recording, and transferring fees just to make that move. So anybody who's considered making a lateral move or not making a substantial move up is probably going to stay in put. So those people that are going to be selling from the existing homeowners are those that need to. We're going to be looking at inventory coming from probate, divorce, and those not voluntarily selling, as we might call it. My prediction there, many of the existing homeowners will stay in place unless they're moving out of town or moving for some other cause other than voluntary. So the third component we want to look at is our landlords and renters. So what's happening right now is the acquisition costs are going up for them to add to their portfolio. So most landlords are holding on to their existing portfolios. Their cost of borrowing has gone up, so they're just not underwriting as many deals. We're seeing less investors buy deals over the last 2-3 months, so it is seriously impacting them. The other thing they're seeing is property taxes are going up. So what you're going to see is that current landlords are going to stay in place, and you're going to see continued rent growth. So they're going to pass that on to their tenants because there is no inventory on the rental side either. So in a nutshell, it's a very good time to be a landlord who's on the hold side. Not so good if you're on the growth side. If you got 1, 2, 3 units and trying to get to 10, it's going to be a little bit of a challenging time. More importantly, it is a challenging time for our tenants. Our landlords out there need to be exceptionally careful in terms of dealing with tenants, keeping great tenants in their property and keeping them happy, because it is a trying time on them. It's very difficult to buy out there. So wrapping this up, builders are producing less homes than is ideal. More owners will stay in place due to the current cost of mortgages compared with their existing mortgages. Could be 2-3% more that they're paying on the mortgages. And landlords are going to bring less product to the market as it becomes less advantageous for them to upgrade into new, bigger properties. Now, so on the supply side, what did I miss? Are you experiencing anything that challenges some of the ideas that I said? Give me your feedback. I'd love to hear it. I'm Jeff Wheatley with RE/MAX, and I would love your comments and feedbacks. Have a great day. Thank you for watching.